Anthony, hello. We make you the presenter now, buddy. Anthony Allyn, come on down. The price is right.
You can hear me, right?
I can hear your voice. Yeah, hi, Anthony. How are you, buddy?
Awesome. Glad to be here. It's been a while.
Yeah, it's been probably a year at least or more.
At least.
And,
right?
you know, I've been following you on Twitter, and you've made some great calls. You know, the first one I could think of was gold at the lows this year when it got smashed. You went into Nugget. That was a great bottom pick. Do you know how to share your screen here?
Yeah, I thought I clicked on it. Let's see, what do I got to do?
You click on it, and it'll ask you which one you want to show, and then you click on that.
Are you seeing it? You're not seeing any screen. Let's see. People see your screen. Oh, click to stop. I stopped the screen sharing. Why isn't that working? Let's, you don't see it, huh?
No. Oh, you're seeing it, Chad? How come I'm not? Let's see. So it's me that's not seeing it. All right, I got you now, buddy.
Awesome.
All right. Okay, so the texts have been on a tear, and you're showing this channel. I think that you put out a tweet that you thought today might end up being negative. Were you looking for a surprise result in the French election, or?
Oh no, I was looking for a sell the news event because I think everybody was going to win over there, and I don't see any more good news coming.
Okay.
So that would, you know, I think maybe the market's going to hold up a few more days. I can show you another chart showing that. But this is the long-term channel going on our 9th year with tech blazing, and
that's 3 threes, Anthony.
it's
9.
well at the top of the channel, and that's where we want to sell. I've got a couple different LA wave counts.
So okay.
I think it's the end of
this has been the relative strength. I mean, it's really kind of a reflection of NASDAQ, this, isn't it?
Definitely. This is what's led, along with healthcare stocks. The whole rally, the entire rally, really, it's healthcare and tech in a bubble. And I think we're going to see money come out of tech and go into energy. Let me show you the 20-year NASDAQ. And here on the 20-year NASDAQ, you see we're touching the top of this channel. So we really don't want to be long here. Even if it throws over, which it did slightly, it's just sitting on this blue trend line, which is typical. Markets break out. So
do you think that there's a shot that we go, you know, it looks like a broadening formation when I look at your bottom line.
Right.
Do you think there's a shot that we take out last year's lows before 5 to the upside begins?
Oh, definitely. Yeah.
So, I mean, that looks like that could come in around 4,000 in the NASDAQ sometime this year.
I think that's a good target, and then see what happens there. We're at least going to bounce off of there, I think.
Okay. So you're kind of in line on your count with some other Ellioticians, and you follow Peter Goldstein at all?
No, I don't really follow.
He's a good follow, but he came in early in the year, and that's what he was looking for. He also had it labeled on the S&P too that we could go back towards that 1800 level before we head up to 29. But I like when guys I respect, and that's why I brought you on, Anthony. I respect your work. So when I have some outside experts that I bring in to edify the community saying the same thing, and you know, I know Blake is I love when selling May and go away. It hasn't worked big time in a long time. Probably people are saying, why do it? I mean, people right now I'm hearing aren't even spending money for protection anymore because they say it's a waste of money.
Huh. Well, that's a contrarian indicator. This is
we're looking at.
This is the weekly. I mean, the weekly. I was thinking about the VIX when you said that, but this is a weekly chart of the Nasdaq, and shows that what I think is.
Doesn't look like. Oh, okay. Go ahead. You're scrolling so we could see the whole thing.
We'll scroll over to the right here in a minute. This is wave one. This is the rally, and then this was one of three. You know, that wave three continued for 2, 3, 4 years. And you could break down this. It's hard to break down this count, but you know it's wave three because of the strength.
Yeah.
Wave one, nobody believed in it. It pulled back, shook most traders out, even in wave two. And this is where I believe energy is right now, actually, in a bull market. And nobody sees this wave three coming. This wave three extends further and longer than anyone can imagine, usually. That's the best way to describe wave three. And so we saw it rally, 2, 3, 4 years, and all we saw was this little pullback. Was this was the August crash here? Right. Bounced back. We got that pullback, which we called because there was no fear in the VIX. Everybody was scared to buy this, but the VIX said, go ahead and buy it because wave A was overdone as far as fear goes. But the VIX...
yeah, that's when the VIX went to 50.
Yeah,
that
right?
was that was a wand devaluation. The Dow came in, opened up 1,000 lower that day.
Yeah.
And they couldn't even open the VIX.
After the market had traded flat all summer, all of a sudden, you know, what caused that was insurance companies pulling out of Obamacare. If you look at the healthcare stocks, you'll see that that's where the panic was, and took the whole market down with it on low summer volume. And but at that time, that was
an August surprise.
Right. Oh yeah, August surprise. Yeah.
Maybe we have another one this August.
That's a good chance. Maybe July, August.
Yeah.
And at that time,
No, go ahead, buddy.
I was talking about newer highs, and everybody probably thought I was out of my mind after that crash. But here we are. And there's a possibility this is a continuation into wave 4, this triangle in purple. And this could be wave D. And so we can come all the way back down to 3,800, or what was it, 4,000 on the other chart.
Yeah.
Yeah.
Right. And then blow off one more time?
Yeah, then we get into wave 5, which that would be similar to the wave 1 here. That would take a year probably.
Interesting.
So,
okay.
Yeah,
so wherever we get, if and when, and I think there's I'm concurring with you, this sell-off happens, this respite shakeout move, this is going to shake out a lot of people. It's going to feel like a crash to them.
Oh, yeah. It's going to hurt. All the young people are invested in tech. And
I mean, you're talking about 30% in NASDAQ here, if we get to that target.
Oh, yeah.
And then a lot of people are going to be calling it the beginning of the end of market down there, right? And then it's going to be interesting down there, too, when this manifests. I'm wondering what will lead in. You make an interesting comment that people are going to start to rotate into oil.
Yeah.
Because our research says that oil may have bottomed, or maybe there's one more low left last week. And I think there's a shot for $62 oil. Still.
Definitely.
Do you?
Maybe higher. Yeah, maybe higher. And I think it bottomed Friday.
So you think the S&Ps could still fall sharply even with strength in oil?
Yeah.
Okay, because that's kind of a fly in the ointment.
It could be a Middle East blow-up event. If Russia and Iran attack a U.S. ship, something like that, then you could have energy and oil skyrocket, and the rest of the market.
Okay, so it could be Yeah, so crude under pressure before Saudi Aramco goes public, so they get a little war going to drive up the price so that IPO goes off.
Yep. It's going to help Saudi Arabia. So whether the attack, well, we've actually been watching for an attack, and things have kind of ramped up. The saber rattling in Iran, buzzing our ships. They ordered some missile they can fire on a U.S. ship with. I don't know if any of it's true, but if they can fake it, that would help Saudi Arabia, our buddies.
I'm getting a question on your CD. Can't it be a wave 5? Why is it a wave 3 instead of a 5 when we complete?
Yeah, it definitely could be wave 5.
Okay, it could be. All right. Interesting.
So depending on what the VIX does, if we see all-out panic and not just a pullback on lower volatility, then it's going to look like this is the top.
And what number in VIX would tell you that? Over 50 or
once it gets over 20, and 20 is like the standard everybody knows as.
Right.
We'll get to the VIX in a little while, but I wanted to show you this.
This is a Russell.
To explain, I use the VIX as an indicator of which wave we're in, because each wave acts differently. Now, if this is wave 4, it's going to look like a crash to a lot of people, but unless we see the VIX get over 20 and start popping and get up into the 50s, then we're not in the big the Armageddon trade. I'm looking for VIX 50 again and plus. So, if it just goes up
90?
and that's
90?
VIX 90, sure. This is financial. This is the Riffin, which FAS trades off of FAS or FAS and F.A.C.E, the triples.
Right.
Uses this Russell 1000 Financial Services Index. You see again, we're at the top of what could be. I mean, I don't really see it breaking out of this triangle.
So if this is a wedge, pull back to the wedge line.
It's a huge wedge. It's a 9-year wedge. It scares me.
The rule would be if it breaks down and doesn't hold that bottom trend line, it's going to 605. That's where you anchor it. You anchor it down there at 605.
Here's what I would do if the wedge breaks. Of course, that's where everyone's going to sell at this 1300 level. If that lower line breaks,
right,
then I would make it a channel.
I see. Nice look.
And
so that's already rolling over.
And here's a little, you can see these 2 points here line up. And this is a good lesson in charting right here, too. Some of the stuff I picked up over the past, how long have I been doing this, 10 years? So
times what? 10 years times what?
I've always watched the markets, but as far as really technical analysis, it's only.
Do you watch the Cubs or the Sox? I know
Cubs, but because I didn't watch this year, that's why they won.
They're losing. Yeah. Okay.
Right. That's superstition right there. So see this. Here I want to show you. I'm pointing that you can see me. That's funny. This line here lines up with these 2 points on the lower candles, same as this one. And so what I do is cheat down this line and look for 1000 at the bottom of a channel. And so if it is only wave 3, this would be 1, 2. Can you see where I'm going with this?
Yeah.
So
3.
1, 2, 3, 4, 3. And so 4 would be a long, drawn-out. Everybody will think the world's coming to an end and blame Donald Trump over the next 4 years, but it's really just a normal pullback. And so
You know, you bring up Trump. Don't you think he'd be better off getting a bear market out of the way in his first 2 years instead of his last 2 years? And or is the timing not going to work out that way? That really, especially if this is only going to be a floor, then we're rallying into 2018, late 18. Right. And then the next couple of years would be pretty miserable going into his re-election campaign.
Yeah, and I'm not sure. Well, you know, he says everything, and then whatever sticks, I think he goes with. And wave 4s take a long time, though. See, wave 2 took a little over a year and a half. It's like it was done by September, so. Not a lot of time. Wave 4, on the other hand, because wave 3 is so long, it needs more time to consolidate. And so wave 4s are, you know, a lot of shakeouts, and they take a long time. And by the end, everyone's like throwing their hands up in the air and getting out. And then it's time for wave 5. Because it's just going to seem like a long time. And it is going to be a long time. I'm going to throw up a hypothetical triangle here.
Okay, well then, even if it's a wave 4, it ends in the middle of 18.
Took 4 years to get here, so I mean it could take just as long to consolidate.
Okay.
And it could be in a tight range. I mean, it could look like this.
Yeah.
I'm thinking it's going to 1,000. So maybe this is better. So tell you what, wave 4 is a good trade. And everyone's going to think the world's coming to the end because it's a big correction. It's the first correction in wave 4. It should look like a zigzag. Like it's probably going to bounce off what we thought is the wedge.
Yeah.
And then tumble into the end of wave A. From there, it can go all the way back up to the top of the most likely going to be a triangle correction. Yeah.
So the A of 4 can go into the end of the year.
Yeah, good.
Into the fall.
Mm-hmm. Or at least, you know, like as soon as we can get it done is the fall.
Okay.
And then we rally back to wave B in the end of the year. And then wave C's are complicated. That's going to take a while. Already I can see me pushing back this wave for another year. I mean, and, you know, it's going to be looked at as poor market performance. But
all it is a correction before the final blow off. Okay.
Yeah. Here's the XLF.
You know, I wanted to ask you something. It's kind of our bailiwick, but I remember you putting up, I don't know if it was on stockcharts.com or Twitter, you had a pretty bearish view of pound dollar.
Oh, you know what?
You know, if you want to go on with
I remember that.
Yeah, if you want to go on with your stock charts, that's fine. But
I just want to show you this other financial. This is the XLF, which is what most traders use. This pullback to the lower blue line, 61.8% Fibonacci target. Well, if we could get this pullback done, I mean, maybe it holds up into the summer and then crashes in the fall. That would still be the end of wave 4, or A4. So watch. I'm using the Fibonacci, let's see, I want to make sure that's correct. I'm big on the watch Fibonacci targets. That's right. That's from the beginning of wave 2 to the end of wave 3 with a 61.8% golden ratio right there. So I like it. I'm going to like it down there. I don't like it up here. I don't like anything up here except energy and maybe biotech now. And you were talking about.
Yeah, I saw that your biotech chart that was 4. lining up for a 5 or something like that. Okay, so
let me see if I can find that gross or that British pound chart. You can see how many charts I've got.
Yeah.
I've got some oil charts in this folder too. I think maybe it's in the world currencies folder.
There it is.
It's the U.S. That's the U.S. British pound.
Okay.
That's not the one. I chart a lot of different views and possible outcomes, and whatever looks best and seems to fit everything else, that's what I go with. You know, I can't seem to find it. Let me look one more time back in this one. I think I've seen a dollar breakout, and I wanted to talk about that. Possible mother of all short squeezes in the dollar. And we were looking for the dollar to consolidate into a pattern last time, and it didn't really do that. Oh, here's the here it is. There it is. So this was the first. I think this was the first move down. Looking at a 3-year chart. I say I think because it's not a 10-year chart, but this acted like the beginning of wave 3, which wave 3s usually look like a crash, and that's what it's looking like. So we got 1, 2, 3, then we got 4, and wave 4 interferes with wave 1 here, which I don't really see as a problem. 1, because it's not a major index, so Elliott wave rules aren't going to apply. 2, wave 4 can interfere with wave 1. See, wave 4 price action interfered with the end of wave 1, which under Elliott wave rules and guidelines isn't supposed to happen. But except, so there's always an exception to the rule, which is in a triangle. So I don't know how. Let me paint this in pink so you can see it.
So now that we're over that breakout line, like 27.5, we could still move up towards 30, 32.
Could, yeah, you could.
Even 30. Yeah.
We saw gold do that kind of.
So then let's see your dollar view then, because I think you're clearer. It might be clearer on that.
Yeah, definitely more clear than this.
Okay.
I mean, this is still trending down. You see with this pink line.
Right.
But so often we see it. We see these false breakouts. Then this pink line would become your stop hunt. So everybody gets shaken out on an overshoot, and then
it fails.
Then destroyed when it breaks.
Yeah, because there's still plenty of bears in there. It might take one more, jolt to the upside to get them to capitulate over the big round number of 130.
Mm-hmm. See, I've got that. I've got the U.S. dollar chart. Today's folder, here it is. So here we see wave 1 back in May of 2016, and then we see 1, 2, and I believe this is 3 judging by the strength of it.
Yeah.
And now we've been watching this pullback into a declining wedge, or triangle, into what is most likely wave 4 because it's a triangle.
Okay. Interesting. You have that 90. Why did you come up with that green line at 97.5?
Because that would theoretically be the end of wave 1 of 3.
Okay, because Nikola Duke has a harmonic that ends right around 97.70, I believe. So there's some confluence there.
So I'm watching that because theoretically wave 4 shouldn't interfere with that.
Right.
And it also lines up. I don't know how long this is going to hold down here. Like I said before, these wave 4 triangles, and this is a good example of one, take forever. Everybody got excited here. It was a 9-month rally, and now we continue into wave 4. So If this,
So the way this is setting up, what we're going to have is kind of a deflationary move with the stock market going down and the dollar skyrocketing into a wave 3 target. Where is that? Up around 110 or 112?
It could be as high as the top of this wedge.
Yeah, that's above all the prices. I have no idea.
That's like
112.
Like freak out. Yeah, we're gonna freak out.
I'm guessing 112.
Yeah, somewhere up there. I probably got a longer term chart.
Okay.
But when they see it, I mean.
So now
break out here and then come back, retest the top of the triangle, will become a support.
Yeah.
See, this is a daily chart. So let's say that takes until July, almost July. Traders are back from summer vacation.
Markets are dead.
You're right. Nobody's expecting anything. And then the dollar breaks out to new highs.
Yeah. And the market sells off and equities sell off.
Yeah.
Okay.
I don't trade currencies, but I watch everything because, I mean, this is a story being told here that fits the other story, which would be deflation, gold sells off, dollar rallies. Oil, on the other hand, doesn't always trade in lockstep step with the dollar.
Well, you know what? I've always had the argument that weak oil prices do not support the dollar, because if it's a petrocurrency and there's less demand for oil, there's less demand for the petrocurrency. And higher energy prices often can be supportive of the dollar because of its petrocurrency status.
Uh-huh.
You ever think of that?
No, I haven't.
All right, well,
you can see where I wrote right shoulder here, too. So everybody got short. Here's the left shoulder. Here's the neckline. Here's the right shoulder. They're all expecting this is U.S. dollar to break down.
Right.
And what it does, it breaks back above the neckline.
And all the dollar bears are out now.
Oh, exactly. The bears are all short in the U.S. dollar.
Yeah, 120 euro, a lot of people are talking, 120 euro. So, interesting. It's really
one more thing on that, if I can find the chart. Super long term, it's 20-year. No. It's the one we were looking at. It's the long-term dollar. Well, what I wanted to show you is that the rally on the dollar reached a key Fibonacci retracement. See, this is what I was thinking last year. So we're going to trade into this triangle in wave 3, a broadening triangle.
Yeah. You do a lot with broadening. You do a lot with broadening formations.
I watch a lot of triangles, period, and especially broadening triangles, because that's what I'm expecting the top to look like. Now this chart was wrong. I'm bullish now. You get to see all my mistakes. Let's see. Here it is. So we saw this big crash on the dollar when the Fed, we had the tech crash. Right. And what did the Fed do? They destroyed the dollar.
Right.
And all that money went into bogus real estate deals, and then that crashed, and then we saw deflation. So you're right on with the deflation. But it rallied right to this golden mean. That's a Fibonacci target going all the way back from the crash to the bottom of the housing market. Now it's rebounded all the way to what it hit it like perfectly. So what we would see is a Fibonacci breakout, which would be super bullish because it would mean the Fibonacci ratio was wrong or didn't work, and also the bearish head and shoulders didn't work, and so you're looking at lots of short covering, and that could go on for some time.
So 120, the old high, the 01 highs.
Yeah. Right. Let's see if we can find the target on that.
That sounds like you, Ronan.
So let's see. There's AB, and then let's say, because this ain't working. or the dollar would be crashing here. This isn't the end of consolidation, so I don't mind destroying the chart. But it's a pretty cool chart because it shows shows why it was sold here. Maybe the machine sold it at that Fibonacci number.
Right.
So I'm not sure if this was AB here or, but anyways, the dollar bottomed here, and no matter what the Fed does, they can't get the dollar to weaken. And they pretty much gave up after QE. And so I would just draw a simple channel. This is a monthly chart.
Yeah, that's some.
I mean, if you told someone the dollar is going to
Mount Everest, it's the Mount Everest trade.
it's frightening. Yeah.
All right.
And how to find?
I'm gonna go buy an oxygen mask for that.
I'm going to build a bomb shelter.
Yeah.
They're trying to sell
In
us
Chicago, you should have one already living in the burbs of Chicago.
Yeah. I remember my dad talking about building one during the Cuban Missile Crisis. When I was just a kid, but he was onto something there. I wish he would have built it. I could trade out of it. So, well, there's resistance, 1, 2, 3, 4, but I mean, this really could continue. I'm hesitant to call a top. I mean, if it's still trending up.
Right. Interesting.
Down, and it maybe
looks like that pink line is going to be it too. Yeah.
Maybe it continues to consolidate on
demarcation line, 97.5. So
97, yeah, exactly. So it's good. I get to update the chart too. So yeah, maybe we pull back this pink line, and then again, July, bad things could happen. I don't think. I think we're going to see tech roll over though pretty quickly though, and the rest of the market, and oil and energy rally. Of course, this would be wave 1 of 3, and is it possible they're going to start trading oil in something other than dollars? Because that would cause would that cause a dollar to rise? Cause oil to rise?
Well, the guy you voted for is going to visit Saudi Arabia.
Yeah, he's going to visit. He's going to go visit the Pope too, which disturbs me.
Yeah, and
we owe the Vatican a lot of money.
And there are guys like Rickards and some of these people who have been talking about the possibility of the Saudis unpegging the real from the dollar. That would do it. So
another thing that's going on is
we all know there are many places in the world that would love to knock off the dollar. They're already doing swap payments for oil in other currencies.
Right. If Russia wants to hurt us, then they can do that with Iran and maybe get some other countries involved. But you know what happened to Gaddafi? So what happened to Gaddafi when he tried to trade gold?
Hegemony. Hegemony. Yeah.
So here's oil since 2016. This is energy, and what we've seen is this pullback, and it's what it looks like. It looks like an ABC, and it took out a key Fibonacci target on Friday and bounced out of the hole.
Yeah.
This 150. This is the S&P energy.
Okay, interesting.
So we saw a little wave.
Great interview, Anthony.
Nice. I'm glad to do it. Glad to share.
And you have any? I know you have your Twitter and you have a private Twitter feed, right?
No, I had the private Twitter feed, but I got rid of that. So I'm just
okay. So what's the best way for people here that watched you and want to continue to follow your work or subscribe to what you do to get a hold of you?
Follow my Twitter at 3X Traders.
Okay.
I want to show.
Well,
Oh, you were done?
do you want to show something else?
Yeah, I want to show you the. See, I'm in energy. Oh wait.
The VIX?
Oh yeah. You want to see the VIX?
Yeah.
I'm gonna find the Dale interview chart here. Here's actually WTI.
Oh, all right,
Yeah.
that's my target, 62. And
Yeah,
you know why it was my target? Because that was the top of the falling wedge before it broke out, 62. So you have 62 in crude too. All right. Interesting.
Yeah, could fall short unless this is wave 2.
Yeah.
Because it looks like an ABB pullback and then 1-2. Not sure about that.
Yeah.
Let me, where are we at? Here's the one. Oh, that one's not. It's a blank chart. We're going to look at the VIX. And I believe it's my last. I get so many VIX charts in here. I don't think any of them are here where they're supposed to be. Let's see. Let me show you the short.
These are 10-year lows here.
Here's
historic lows, right?
Here's my busy short-term VIX chart. It's a mess, but it's working. And we saw the VIX go higher than I thought it would, and I was wrong. I'm like, it's not breaking out here, and and it did.
I remember that.
But I stayed bearish, and it really broke out. That's what the holy cow is about here on this. It broke this channel, which this red line represents the lower channel, and this blue line.
Yeah.
It was just smashed. I think there were a lot of people short the VIX or long the VIX here, and they were just destroyed. And now we've seen it just hanging out down here, not at new lows this morning. So I'm thinking gap fill. Thought it might happen as soon as today, but it's taken its time. And so that gap fill will take place about 1350 if it happens in a hurry.
And then that's it? Then it goes down again?
Then it's going down, yeah, probably to this blue line.
That's like 9.
Let me show you my long-term VIX chart. I mean, it's scary to be long anything here because the VIX has been consolidating for a long time. I wish I could move the chart so you don't have to see all this. And this represents volatility in April for 4 years. Now we're seeing it in June. So, and now we see the VIX consolidate down into this purple triangle, which really that could be the only 2 lines you need on the chart. Go to, what is that, 3-year view?
Yeah. So you're looking for a low in the VIX around June, July?
Yeah, again, the July.
Yeah. July, so the dollar low.
Maybe they take all summer taking profits.
Maybe the stock market high takes that long. Could the stock market high take that long?
I don't think so. I think we're, oh, you know what? That's a good question. You know, and the charts need constant updating, and you have to watch them every day and update them every day, or it'll get away from you.
Right.
You can see this wedge.
Yeah. It is diverging.
Could even fall like to $8 or $9 on some kind of news, and then what does it look like here? This bottom purple line in middle of July. But I think once this finishes, and here's where I saw the top on the VIX last time, this pink line. So once we get up over 1750, I think we're going to be off to the races, and the market's going to be tanking then. And as long as it stays above that 1750 level, looking ahead.
I'll tell you wave 4 is underway at least. Okay.
I'll tell you that we're in a major sell-off. Once it breaks out there and stays above 1750, and I would say 1750 becomes support. Top of this triangle also becomes support. And once you're above 20, or even 1750 in this, according to this red line, then we're going to be headed towards 55 probably.
Okay.
56 on the VIX.
Okay.
Hard to imagine.
And then if we break out, it measures 95. But Anthony, great interview. A lot of very good looks in equities and the dollar and oil. So
I was happy prepared this time, and thanks to you for encouraging me, because actually, and you've helped me out with some upturn trend lines, looking for stop hunts and stuff, and my chart has improved exponentially over the past year or two because of it.
Oh well, great, Anthony.
I could show you the short-term market before we go. Where's the candlestick folder? We called the top, there it is. The chart's working. I love it when the arrow works. So when it doesn't work, I get upset.
Yes.
I get upset. So this is either a broadening wave 4, and so if that's what it is, like you said, then we could rally into the end of the summer. And we're kind of looking for a shakeout before the breakout, before the bears head on vacation and cover their shorts down here. So, and the S&P looks about the same. We're also watching the, this is the 50-day. So we've been trading in this little range here. It's driving me kind of crazy, and I expect us to hold up in that range. I thought I had a view that was showing it holding up a little longer. This one, this is the S&P.
Okay.
So it could be wave B, and it could just hold up this little range here between 2376 or 72 has been like the.
So again, a regular ABC.
And yeah, kind of whipsawing into a wave B, and then a correction in a powerful wave C before the summer if they dump before Memorial Day. But no one wants to get short here. Not really sure. I suppose that's where the bulls want to dump, is where the bears don't want to get short. I think it's all about, we don't want the bears to make any money, so we're going to wait until just before Memorial Day to take profits, and then squeeze them into the summer on light volume. I look a lot at holidays and calendar dates to determine what's going to happen next. But I'm very nervous about the market here, and I'd say sell tech, buy energy. I think we saw the bottom on oil. I think that's the only chart I didn't show. The WTI.
I think you did. Yeah, I think you did. That's how I came up with 62.
Oh, yeah. I tweeted it up this morning, the short-term Elliott wave count on the WTI. So you can check that out at 3xtraders.com, and I'll see you all on Twitter.
Okay, everyone, thank Anthony Allyn at 3X Traders. May pips rain down on you this spring and summer, the rest of the year, my trading warrior brother. Thank you very much.
All right, thanks a lot. Talk to you later.
We'll do it again, buddy.
Yeah, thanks. Bye.
All right, see you later.
All right.
Base members, see you guys tomorrow for Turnaround Tuesday. Thanks for your attention. Blake, thanks for your analysis today. Steve, Stelios, Velu, everyone have a great day. Tomorrow I have Chris Bear, Brazil, is going to be with us. Till then, don't just count your pips, count your blessings. I'll see you tomorrow.